Good evening and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for Saturday, December 19th, 2015. We did a midweek update after the Fed announcement came out this week, talking about how this may lead us to some higher prices, and sure enough, the Fed move was a complete bust. You could see that we really just closed down on the week. Decisively lower, especially the last 2 days after the Fed announcement. So what looked like a strong move coming out of that announcement has quickly turned against us. So here we're looking at the S&P 500 futures, and you can see on the top chart here that we are or we have been consolidating in this larger range for most of the year, even a little bit of last year, all the way between 1883 and the highs around 2120. This year in particular, we've pretty much stayed in the range between 2000 and 2100. You can see that right in here. We did that for most of the year. Then we had this big pullback in August and September, and here we are now trying to hold on to that range. So we are coming into what we were discussing as far as a potential trend line. We did, if you go back to our analysis from, I would say, a week ago, it may be one more back, but we are coming into this downtrend line that maybe holds from these lows. All right, but what I was looking for was for this 2000 level to hold. We had a brief pullback below it. All right, had a nice strong rally off of it. You could see that was kind of caused by this hammer pattern. Ultimately pulled up, had the Fed announcement, everything looked great, and then sure enough, next day traders said, you know what, not so good. Let's sell this thing off, and that's what they did. So we went from a high of 2068 to 1994 in about 2 days, just about. And no matter which way you're trading, if you're long, if you're short, you're gonna get caught in that move. That's called a whipsaw. That is exactly the move that professional traders like to do. They try and get all the retail buyers to pile in, and then they slam it right back in your face, and that's exactly what we saw this week. So this quick V-shaped reversal, sometimes we see them to the downside, sometimes we see them to the upside, but if you look at this week, we had it almost, or the last 2 weeks, we had it almost in both directions, right? We came straight down, straight up, straight back down. So now we have the holiday week coming up. Market will be closed on Friday for the Christmas holiday. It's a half day on Thursday for Christmas Eve. So just have that in the back of your head, because a lot of times now these professional traders, they kind of take the time off and they look to to not really do too much. So this could have been their move, just getting out of everything before this week, and maybe now the coming week it'll prop up a little bit because retail traders are going to buy it. Just that's the trend for retail traders, that they typically don't short. So Friday's action could have very well been professionals just getting out of the way, taking their money, putting it on the side, because they knew they were going to be away for this week. So as far as the market goes, honestly, it's a toss-up, and I'll be perfectly honest with you. There's no reason for me to BS you. I have no idea where this is going to go. This thing has been so volatile lately. If you asked me I told you on Wednesday, if you asked me, I thought we were going to test 2100. If you asked me last week, I thought we were seeing more lows. So now this week, I'm back to, I think we see continuation to the downside. I think we at least test this trend line, come into this level. Maybe we pull all the way back to the highs from this little consolidation that we had in August and September. So maybe we come back to this 1972, and that's where we find support. But we've talked about this in the past. Look at where 1972 comes in. Look at where the trend line comes in. It's a perfect spot to test and bounce. So what may very well happen is Monday, Tuesday, we may see some continuation to the downside, test that 1972, and then start to rally towards the end of the week. All right, this has not been a typical December. A typical December is usually up. But the year hasn't been the best. This is not a good year for the market. It's pretty much a sideways market. Our portfolios are performing okay. We're outperforming the market, but we're not positive for the year. So it's just a kind of a sign of the time. So I would love to tell you that every year you can make money in the market. if you have a good system, your chances of doing that are very good. But sometimes it just doesn't work out that way. And for us, we got caught in this big down move in August. Got a lot of bad fills on some of our exits, and it cost us. But other than that, we've stuck to our system, and we're showing a slight loss for the year, but we are outperforming the market. So again, you got to look at it glass half full. You're still doing your job. You're outperforming the market. You're not losing as much as the market. But anyway, that's kind of off topic a little bit. As far as getting back to the market, S&P 500 futures, like I said, I think we see a little bit of pullback to the downside, right, to test that trend line. Here you could see the the actual S&P index, just a dirty day. All right, you can't make this stuff up. Just look at how these big red candles. We've had 1, 2, 3 of those red candles in the last 7 trading days. Right, not the best case scenario for for a bullish play. But again, we still have this level here that I think is probably where we're going to end up. Right around that 1997. Again, futures and index have a little bit of a different price structure, so that's why you're not getting the same prices. But I would say maybe this comes back down to test that 2000 level in the SPX and uses that as support. All right, so both the S&P and the SPX are trending lower, and again, I would expect to see that continue at least for the start of the week. Looking at the Nasdaq futures now, similar situation. We could take and remove this. I think we could probably come all the way back down into this 44 level, 44.40. All right, and again, depends on how you want to draw this trend line. But if you were actually using what looks to be the lows, you could see a little bit more pullback, and again, come right into a key support area right around that 44.40, which also lines up with trend line support. So again, going forward, maybe a little bit more pullback and then a bounce. The concern I have here is this, to me, I'll highlight it. This right in here. Okay, that looks like a lower high, and that's a concern. Okay, and the same is on the S&P, and those are concerns. As far as the Nasdaq Composite, all right, you could see a similar situation, a little bit more downside, right, maybe to 4,900, 4,910, and then it pretty much right now is sitting on that trend line. So you wouldn't want to see this one break down too much further. If it starts to close below 49.10, it's a concern. Not that we can't go there, but it's a little bit of a concern. And again, looking at it again, there is that lower high in place. So the indices not looking the best. I'm not going to lie to you. These are just big sell-offs. I mean, they're right at support, and the way that it happens on a Friday afternoon, it's a killer. And I'm not gonna sugarcoat it for you. It is a killer. And it's frustrating because you had a great week. I mean, look at the model portfolios. I had a great week in the model portfolios until Friday. Okay, Friday it took back all of the gains I had for the week and then some. And it's just the way it is. And we are outperforming even with the pullback on Thursday. We still outperformed the market. We are actually almost positive in the core portfolio, which is a long only portfolio. Great to see. But there again, Friday, I mean, it took back whatever it didn't lose on Thursday and whatever it was going to lose on Friday. So not the best week. And like I said, it always seems to happen on Fridays. Why that is, I don't know. I don't try and know. I just look at the price, and right now price is sitting for the Dow right at that 17,000 level. Huge level. Looking for it to rebound off here. Again, you could see that same potential for a lower high in place. And here we are with the actual DJI, which was down 367 points, and this one is breaking down. Okay, so not a good sign. All right, looking at this, this tells me maybe more lows are in, lower prices are in store. Maybe we come all the way back down, crazy as it may sound, maybe we come all the way back down to the 16,750 area. It's very possible. All right, this is not a good setup, not a good look for the Dow, and this could very well lead us lower. Last but not least, let's look at the rut. And here you can see, tried to get back into that box, quickly rejected. Looks like it's moving lower. All right. And the only thing that probably stands in its way is this trend line. Okay. Which, again, we connected 2 points. Sure enough, we hit that right on the head. All right. And this level is 1100. Okay. So the 1100 level needs to hold. Plain and simple. All right. You can see the downtrend in place. Nice big rally. And then the month of December, just a puke fest. All right. Look, every day. Blah, 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 straight down. Try to get a little bit of a bounce. The short seller said, you know what? That's great. I'll take my fills at better prices. And here we go again. So this could very well be down at 1073 before the month of December is over. Just the way this is going. It's not a good look for the rut. All right. And speaking of the rut, let's take a look at the actual rut, not the future. And you can see right into that 1100 level. All right. Key level, 1107, 1100. Extremely huge level. Okay. Plain and simple, plain as I can make it. All right. So looking at the market for next week, just be small. Honestly, just if you don't have to trade it, don't trade it. If you're in predominantly cash, good for you, and stay that way. I don't really see any reason with the last week of the trading year that you have to be a cowboy and go out and really try and make something happen. You don't force it, just let it come to you. And right now, it is not stacked in your favor to go ahead and try and do something this week. So that's kind of the mindset I'm taking with the model portfolio. I'm really not doing anything as far as new trades go. And we're going to leave it at that. Now, with that said, I want to just announce that starting Monday, we're going to have an open house in the model portfolios. So you go in, you just check out the blog post. You'll see the sign up form, and we will go ahead and open the doors to everything that we have in the locked sections of the website. So that means you get access to the trade alerts, you get full access to all of the nightly recap, the full nightly recap, because if you're not a member, part of the nightly recap is locked out only for members. You'll get access to that. You'll get access to our trading videos that we put out today, and anything else that goes out during the week, and that'll last until January 1st, midnight of January 1st. This is my way of just introducing everyone to the website without offering discounts. I don't believe in discounts. I'm a firm believer that my members are valued clients, and if I start offering discounts to new members, then that doesn't look good to my existing members. So I'm not a believer of discounts. What I do is try and just open our doors every once in a while so you could see inside, see how we do things. So if you're interested in that, be on the lookout Monday. I will be sending a blog post. If you're not part of the nightly recap, sign up for the nightly recap on the homepage. This way you'll make sure that you don't miss that information, because it will be sent out to the nightly recap members or newsletter. And as far as that goes, that's it. So again, if you're really looking to start your year off the right way, I highly recommend checking out the open house. If you like it, stick around. You still get your free 30-day trial. So you can essentially get a month and a half of the service for free before you even have to pay any money. All right. So you have all that time to determine if you like it or not. And again, we don't do it that often, so I would highly recommend taking advantage of it. Again, if you're not a nightly recap member or don't get the nightly recap newsletter, go to the homepage. You'll be able to sign up right there, enter your email address, and then when I put out the sign up form, it will come through the nightly recap newsletter. All right. Now, as far as getting back to the markets, if you look here at the sectors, you can see there's only 3 sectors that have been outperforming. All right. And a lot of that is sectors that have been a little bit beaten up in the last, at least I noticed on Friday, the sectors that were beaten up during the year, those are the ones that were starting to rally. So we maybe get a little bit of year-end, window dressing, where people are starting to sell some of the stocks that have been outperforming, trying to buy some stocks that have been underperforming. Maybe it's a rotation of money. I don't know what it is. I don't try and know. Again, just understand that there is a little bit of a rotation out of the leading stocks into the lagging stocks. And here, you can see we have the XLP. The only three that have outperformed the market this week or the XLP, all right, consumer staples, which the scary part is that is outperforming. All right, for the last month, this is how it looks to outperform the market. And look at the last 2 days. All right, completely sold to the point where we had a huge gap in consumer staples names. All right, that is very, very rare in the index or in these sector ETFs to have these gaps. All right, so that tells you that there is some strong selling. The XLV healthcare names, all right, they've just consolidated for the month. All right, that is outperforming. Again, look at the huge gap that we had in the ETF between Thursday and Friday. You don't see that gap too often. All right, the only time that I've seen that gap is looking back here when we had the huge pullback. And this is what I was saying about getting bad fills. You could see that there was just bad fills in that candle. So some people got filled at bad prices, and we were one of them. All right, so not a good sign. The utilities, all right, again, these are sitting almost at their lows for the year, and that has outperformed the market for the past month. The ones that were outperforming were some things like the XLF. All right, they were doing well. The XLK got smacked around this week. All right, still consolidating. The XLY, discretionary names, all right, still in its range. All right, so a lot of sectors just, honestly on the balls of their ass going forward. So just have to see where they end up. All right, and again, just don't be a cowboy. Don't be a hero out here. It's not the time to do it. The cards are stacked in your favor, or against you, I should say. The cards are not stacked in your favor. They're stacked against you. So looking at that, let's just move on and just assume that this week is more of a learning experience than a trading experience. All right. Now, as far as a couple things I just want to go over, as far as our process goes, what we do in the core portfolio is we put together a weekly watch list. So again, if you sign up for the open house, you'll be able to benefit from that. But one of the things that we do is every week we update that watch list. So we've had a lot of names on the watch list the last few weeks, and I want to go through a new one, and I want to go through one that is failing. So the new one, the one that we're taking off is ACN. All right, and we'll go over this with the members as well, but just so you guys have some inclination of how we do this. Now, as we've talked about in the past, we like to see stocks continue their move higher. We like to see them consolidate above the 50-day moving average and eventually break out. So we look for weekly and daily breakouts. We had that weekly breakout in ACN in Accenture. All right, weekly breakout. It then decided to consolidate on the daily chart. And this week, instead of holding onto this level, what happened? Well, it broke down. All right, so now it's trading back below 103. And maybe it's going to test 100 and bounce off 100. Maybe it's going to test 98 and bounce off 98. But from us, from a trend following standpoint, for a long only perspective, I don't care about this stock anymore. Why? Because it's not going higher anymore. All right, so that's a big key that I think a lot of people don't understand, is that you don't have to trade everything. You just have to trade the right things. And what I mean by that is, I'm an Apple guy, okay? I have Apple everything. This is being recorded on an iMac. I have iPhones. I have iPads. My kids have iPhones, iPads. I got an Apple a long time ago. All right, I got an Apple right around that 122 area when it broke down. I had a nice gain in Apple, but for me, it's not the right thing right now. I would love to say, yeah, I own Apple, but I don't, and that's because it's not going higher. All right, so the same with ACN. Stopped going higher. It broke down below trend line, broke down below 50-day moving average. It broke below the consolidation. So what do? Well, we take it off the list. We look for it to go ahead and reset up. Okay, so we'll just if it's going to set up, it pops up on my scans. I have you can see down here, I have a trend bullish scan that I sort through every weekend, and if it's going to pop up, it pops up, and then I look at it again. So just understand that you don't have to trade the popular names, I guess is what I'm trying to say. You don't have to trade the Disneys, you don't have to trade the Apples, you just have to trade the ones that work and the ones that are in the right mindset, or technical mindset, I should say. And that's what we're trying to do here. So ACN will come off the list. One that is on the list and will remain on the list is Campbell Soup. Okay, and why is Campbell Soup on the list? Well, because Campbell Soup, just the exact opposite of ACM, is trending higher. You could see that on the on the weekly chart. And you can see it's actually to the point where it has consolidated twice on the weekly chart. Okay, something along those lines. And now it's broken out. All right, and now in this new breakout, what's it doing? Well, it's consolidating, and it's still staying above a key trend line. It's still above the 50-day moving average. It's still above the trend line. All right, so what are we looking for in CPB, which is Campbell Soup? Well, a couple things. We don't know where the low is. I would think it's somewhere around here. It may be more around this gap fill area, right around 51. But completely opposite from Campbell Soup is not breaking down. It still looks like it wants to go higher. It's still trending higher. All right. ACN has broken that trend line. Therefore, it's not trending higher anymore. CPB is trending higher. All right. And until that one of those trend lines fail, whether it's the 50-day or the trend line that I've drawn in, it'll stay on our watch list. Now, if it doesn't consolidate, like if it comes in and say it bounces off this 51 area, all right, and then it goes back to 52 and then it breaks down, well, then it's not a nice clean consolidation and it'll come off the list, but it doesn't mean it's not trending higher. So what we try and do is take all the S&P 500 stocks, the scan takes them down to about 150 stocks, and then I personally take them down to about 30 or 35 stocks per week. And this week, honestly, we got a lot of ACNs that are coming off the list. So this week, it could very well be that there's only maybe 15 names on the list, and that's what we run with for this week. And that's part of the system. That's part of having a system in place, is as the market conditions aren't in our favor, well, the stock selection gets a lot thinner. And that's something that we teach the core members through that core portfolio. And again, that is meant for an IRA, a custodial account, whatever it may be, but that is a core aspect to everyone's investment portfolio. And I think that's something that you need to have. It's a long only portfolio. It has nothing to do with short. It's a longer time frame. So it's long only, longer time frame, and it's meant to just capture big gains. All right, we've had some nice huge gains in that portfolio. We've had a lot of small losses, and that's just the name of the game. All right, let the winners run, cut the losers short. So if you want to check it out, take a look at the open house this coming week, and hopefully we'll see you on the membership side. Other than that, any questions or comments, leave them below, and I'll be happy to answer them. And enjoy the rest of your weekend. Have a great day. Take care.